Thanks for staying with us on SABC News. China stocks were steady on Wednesdays as investors assessed domestic economic data that signals signs of improvement, while an on-target US inflation print helped ease contagion fears from Silicon Valley Bank's collapse. Retail sales in China in the first 2 months jumped 3.5% year-on-year, reversing a 1.8% annual fall seen in December. But factory activity expanded slightly slower than expected, rising 2.4% for the same period. That's according to data by the National Bureau of Statistics. Now, the Shanghai Composite Index edged 0.55% higher, and the Hang Seng Index climbed 1.52%. Let's go to the United States then, where stocks rebounded on Tuesday as largely on-target inflation data and easing jitters over contagion in the banking sector cooled expectations regarding the size of the rate hike at the Federal Reserve, the U.S. Central Bank's policy meeting next week. The S&P 500 was up 1.68%, the Nasdaq Composite gained 2.14%, and the Dow Jones Industrial Average was up 1.06%. Let's come closer to home. The JSE is trading lower at this hour, taking its cue from international markets. The all-share falling around 2.5% to 73,139. The rand is weaker against all major currencies, 18 rand 33 to the US dollar, 22 rand 13 to the pound sterling, and 19 rand 48 to the euro. When we take a look at commodities, gold is trading at $1,906 an ounce, platinum at $970 per ounce, and a barrel of Brent crude oil costs $76.95. Let's get some analysis on the market with Chantal Marks from FNB Wealth and Investments, who joins me now. Chantal, let's start with stocks in the US. We saw them closing in the green yesterday. Excitement around the inflation print. What else was affecting their markets?
Well, at the time, what was affecting their market was a sense that the kind of chaos that we've seen in US regional banks and the banking sector generally has more or less come to an end. We also saw some of those regional banks that suffered huge losses on Monday coming back quite nicely. But what we expect today is going to be a little bit different. It's going to probably feel a little bit more like Monday than it did on Tuesday. Massive volatility in the market at the moment. Today, the focus really is on Credit Suisse and its issues that it's facing, also a very specific set of issues, but fears that Credit Suisse is a systemically important bank. It's a much larger bank than the bank failures that we saw in the US. And if you are going to get a situation where that bank failed, then it could have far-reaching consequences. So really the focus is Europe, but it's probably going to impact the US today, and it certainly is what is impacting our market today as well.
Chantal, I'm reading different commentary. One is saying the panic around Silicon Valley Bank has eased, and the contagion that other banks around the world experience as a result of that has done the same. And then we're seeing ratings agencies downgrading US banks. So what's actually happening when it comes to banking stocks and the banking environment?
So I think in the US, you kind of have to tier it. So you have two types of banks in the US. You have the big systemically important banks, the JP Morgans, Bank of America, Citigroup, those kinds of banks. And then you have regional banks that are almost like mutual banks, or as we have them in South Africa. Now, these banks fulfill a very important role from a regional economic perspective, but they're not really facing as much scrutiny from regulators in terms of what they're supposed to be doing with deposits. Usually these banks are actually quite conservative because the US does have a long history of regular bank failures, and they only invest their deposits in very safe assets. They also match the timing of their assets and liabilities, so the investments that they have with the deposits that may come that investors may want back at some point very closely. But then you have banks like Silicon Valley Bank that have just kind of missed the mark in terms of what they did with that deposit base. So I don't think that the risk in terms of contagion to the rest of the US banking space, even the regional banks, is as significant. But certainly the risk is heightened in the regional banking space. Outside of the US, I don't think that there will be much contagion from SVB. The Credit Suisse story just almost happened at exactly the same time, but it's almost unrelated, if I can put it that way.
Okay, let's go to Asia then. We saw that promise of the recovery of the Chinese economy is really coming into being now. What else is moving Asian markets?
So I think Asian markets are also kind of driven by fear around big banks globally at the moment, whether that's warranted or not. And then, of course, economic data and economic growth, or as it pertains to economic growth in China, is really important at the moment. A large part of the kind of Chinese recovery is going to be premised on kind of recovery in the construction sector, the manufacturing sector, but also they are becoming a lot more consumption driven. So a print like this morning's retail sales print will be very important, and that will have an impact on what is expected from Chinese growth going forward. And I think it's actually important from a global perspective, because we do see slowing growth and meaningfully slowing growth in some of the other larger economies globally. So we really need China to come through to prop up global economic growth this year. And from a South African perspective, we want them to buy our commodities, right?
Chantal, when we go to the United Kingdom, the British budget out today, what's moving European markets? What's of interest? Anything else of interest in that region?
So I think the Credit Suisse story really is dominating there as well, it being a European bank. But I think that it's probably going to be quite interesting to see what happens with the UK budget today. The last time we had a UK budget, you'll remember it was that absolute disaster that was put forward.
Yes, I actually forgot about that.
Yes.
That's right, yes.
So it's quite I think both everyday people in the UK, as well as market participants, are watching this one closely. They're in a very precarious position from a budget perspective. There's a lot going on there. They're really being impacted by their decision 5, 6, 7 years ago to exit the European Union, and they have a lot of fixing to do. So it's going to be a difficult one, and I think that one that will be monitored closely outside of all the chaos that's going on around Credit Suisse and European banks at the moment.
Okay, let's come closer to home. We saw Iran falling around 0.4%, if I'm correct, a little bit earlier on. We're expecting retail data out today as well. What's happening in our local markets that we should be aware of, whether it's company news or data that's affecting us?
So we have had a very negative day today. The rand is quite weak. It's now weakened by 1.2% relative to the US dollar. It is a function, though, of a stronger US dollar, because the expectation is that the Fed will raise rates after that inflation print, and that they've contained the SVB story. So it's not really an SA thing when it comes to the rand today. The market, I think, is weak because risk assets globally are being sold off because of everything that's going on that we've already mentioned. In terms of company-specific news, 2 releases stood out to me. Stadio coming out with really solid numbers this morning. I see that share is up quite comfortably today. Just noting that demand for distance learning remains quite high, and they continue to see good growth in that segment of the market, of the education market, and they're gaining market share there. And then we also had results out of Growth Point, well guided for results. But there does seem to be a bit of weakness in the property sector in South Africa, and Growth Point being the largest listed property company in the country, showing that rental reversion, so the rental rates at which they sign new leases, are still moving sharply backwards, perhaps just worrying the market a little bit. That stock down 1.5% more or less so far.
Chantal Marx from F&B, thanks so much for your time. Really good to speak to you today on what's moving the markets locally and internationally. That's where we leave it for now. I'll be back after a short break with some business news for you. Do stay with us on Point.